Tommy is going to be, all right, recording just started. So I'll just start over. We have Tommy Thornburgh on the line. Tommy is going to discuss entity formations with us, business credits, estate planning, taxes, a lot of these things that are important to new agents, new business owners, and definitely vital information to help you succeed in business as a realtor or any business in life, really. I'll introduce myself again real quick. Michael Garvin. I'm here in New York State. I currently have two roles within the EXP Military Network. I am the New York State squad leader, and I am the veteran and active duty events and information coordinator. So I'll let Tommy take it from here, introduce himself, and this will be a pretty important meeting for everybody. So I'm glad you guys showed up.
Thanks so much, Michael. I appreciate it. Thank you, everyone, for being here. Like I told Michael, and thank you all for your service more than anything else. I was just telling him about my cousin, Mikey Mansour. I talk about him as often as I possibly can. And thank you. So my name is Tommy Thornburgh. I am the president of Prime Corporate Services. A little bit about me, a little bit about the company, and then I'll jump into all the information and try and give all of you as much value as I possibly can today. That's my goal, is if I can give you 1 to 5 takeaways that you can leave this call saying, that's going to make me feel more protected. That's going to save me thousands, if not tens of thousands of dollars in taxes. That will help me build up a better credit profile to be a long-term investor, or that will protect my assets long-term. If I can scratch that itch for some of you today, that's my ultimate goal. I just want to bring as much value as I can, and I'll make sure to leave time at the end for Q&A as well. If you have questions as we go, feel free to throw them in the chat. I'll be watching the chat as we go, and I'll ask a couple questions as we go through as well for a little engagement also. So a little bit about my story, and I don't always share this because it isn't always relative. We work with a lot of different business owners, but my mom was a real estate agent. My dad owned a real estate brokerage. My wife is a real estate agent. And as I give a lot of these presentations around entity and tax, I joke that I try and think about it like I'm talking to my mother, because my mother knows how important tracking your expenses are and that taxes are coming every year. But if I told her throughout this presentation, track your expenses, hire a CPA, make sure your LLC or your S Corp is set up properly, she would say, okay. And whether or not anything changed, that's where I realized that all of you are going to learn a little bit different. And I'm going to have some different areas where I can tell you where to take notes, how to take notes. But if I talk about something today that's not applicable to your situation, throw it out. Okay. Because the tax code is so complex. I kind of joke that the tax code has become a joke. It's over 70,000 pages now. And while not every tax code is going to be applicable to your situation, we just got to go find the areas of the opportunities that are, so that you can make the decision on what's best for you financially. Okay. So with that being said, Prime Corporate, we've set up over 175,000 businesses. We file about 40,000 tax returns a year, but the 4 main areas that we focus on are entities, credit, tax, and estate. That's where I'm going to try and find as much value to give to you today. Okay. Before I jump into all the info, everyone's favorite part, my legal disclaimer. 2 things on the legal disclaimer. Number 1, everyone's situation's different. So some of you are married, some of you have kids, some of you may already have multiple businesses or multiple streams of income. That obviously changes your overall tax picture. And then the second part, I'm not a CPA or an attorney, but I have a full team of CPAs and attorneys that do all the work. So I've got about 450 employees. We've got about 160 accountants and attorneys. Oh, I got someone that's not muted here. Yeah, we can mute just to make sure. That'd be great. So they're the ones that do all the work. I like giving these presentations a lot. I've been doing them for a long time. I also love talking to you just as an investor and as a business owner. Okay. I own several businesses. I actually currently own 77 doors of real estate, percentages in a couple corporate buildings. I am a huge fan of real estate, not only from a passive investment standpoint, but also from a tax strategy standpoint. So I'm really excited to talk to you about what you can do to better your situation as an agent, a broker, an investor, but also go help more people understand some of this information. Because what I found, and this may be just me, but when you do it, it makes it a whole lot easier to talk on it and help others understand what they can do and how they can utilize the tax code as well. Okay. So for today's key points, number one, let's break down and let's talk a little bit about different types of business entities. You've got LLCs, S corporations, professional limited liability companies, depending where you live in your license, holding companies. What is best for you and why? I want to give you a little bit of framework on questions to ask on whether if you're already structured or still plan on structuring your business. Okay, number two, we'll talk about tax deductions, how they work, some of the best practices on tracking and organizing your expenses, as well as what you do or do not qualify for from an overall tax standpoint. Okay, number three, asset protection and generational wealth. For this group, I will also talk about some of the different VA benefits. For instance, I don't want you to buy an estate plan from me. I'd rather help you. There's VA resources that you can get a trust and a will for free. So what can I do to help you understand what those different benefits are? I truly want to just bring value and help you in these areas as much as I can today. Number four, personal credit versus business credit, how you can separate your personal from your business legally, financially, and be able to use business credit to let the business pay for itself and pay yourself from there. Okay. Now, if you guys will help me out, I would really, really appreciate it. If everyone can pull up the chat for me real quick. And I'm just curious, based off of your situation, your life, your business, which one of these benefits you the most based off of where you believe you are right now? Number one, entity structure. Number two, tax benefits, tax minimization. Number three, asset protection and generational wealth. Number four, personal credit versus business credit. If everyone would take a minute and just pull up that chat, drop a 1, 2, 3, or 4. Gary, I appreciate you. Asset protection and generational wealth. I love it. That usually tells me you're making money and how do I protect it and make sure I got my T's crossed and my I's dotted. Nathan, entity formation. Appreciate it. 3, 4. Okay, great. Asset protection, generational wealth. Beautiful. All right, cool. Thank you. Thank you. Thank you. It helps me kind of get a gauge on where I should or shouldn't spend a little bit more time. But like I said, as we have questions that go through, keep me honest, keep me engaged, ask those questions in the chat. I want to answer as many of them that you possibly have today as well. Getting started with entity formation. I like starting with entity formation because I consider it or I look at it like the foundation to your business. Personal is personal, business is business. The more that you can separate those two, in most cases, the better. So being an agent, being a broker, being an investor, the reason that I don't recommend operating under your name or your social, from an informal standpoint, there's very little asset protection, if any, and very few deductions that you have an option to utilize. So a lot of times I recommend, and I really, really like LLCs because they're flexible, they're simple, they're easy. LLCs oftentimes, and write this down, please. Here's the 3 things that I tell people to take into consideration, whether you're already structured or plan on structuring in the future. Number one is privacy and protection. How much privacy do you want? How much protection do you need? Okay, the protection that you need will vary as you build your net worth. Number two is tax benefits, profit or loss. So good or bad, profit or loss, when you make a dollar or spend a dollar, how does it impact your bottom line? And then number three is credibility. Show yourself as a legitimate business, not only to your clientele, but also to banks and lenders. Knowing that banks and lenders are businesses, if you can show yourself as bankable, it oftentimes puts you in a much better position. Right? Now, the reason I love that LLC, once again, is it allows you to separate the personal and the business. But what I also like about it, for those of you that are agents or brokers, for instance, a lot of times you're generating active income. So if you have an LLC and you go generate, usually we see $30,000 to $50,000 of net income or more. It is oftentimes worth reviewing with your accountant or your CPA on if it makes sense for your LLC to be taxed as an S corporation. Okay, S corporations are very similar to LLCs in the sense that they flow through. They don't overcomplicate your taxes, but that S corp allows you to pay yourself a salary or a distribution. It also allows you to avoid half of your self-employment tax, which is Medicare, Social Security, ends up saving you about 7% on that overall income. So active income, you're exchanging time for money. Those are going to be the highest tax rates. You're between 10 and 37% on the federal level. Okay, now if you're in New York, like Michael, or California or Massachusetts, you know you've got a whole nother state tax on top of it, right? So if we separate the active income from maybe some of your passive investments, there is no self-employment tax on passive investments. We don't necessarily need that S Corp election for those of you that potentially have rental properties or whatever else. So take that into consideration as you build, as you grow, as you scale, as you have multiple streams of income, active income versus passive income, LLC, S Corp, and then I'll talk a little bit more on anonymity and privacy as we move forward as well. Okay. Once you have these business entities in place, if anyone, by the way, gets overwhelmed by the conversation today, I'm going to go over a lot of information. So as I mentioned earlier, pick out the pieces that are applicable and just implement one or two things that can hopefully benefit your situation is my feedback. But if there's one takeaway that I can give you that's the most important that I've seen is please, please, please track your expenses. Okay, what we found last year, we filed 40,000 tax returns, and I had our accountants collect a bunch of different data points on why do some people save more money in taxes than others, kind of a case study, if you will, to give visibility. The number one reason was very boring. It was clients that tracked and organized their expenses saved an average of $9,200 more than they did the previous year. Okay. So whether you hire a bookkeeper, whether you use QuickBooks, whether it's one designated credit card that you can track all of your business related expenses, the more that you're aware of your profit and loss, I kind of joke that it makes you get comfortable being uncomfortable with your finances. Because if there's anything I've found being self-employed since I was 18 years old, is there's either too much money or not enough money, right? Especially when you have partnerships. I've never met an entrepreneur that says, I wish I had less money, because it allows you to grow. It allows you to scale. It allows you to help more people. So when you track these expenses, here's kind of an action item that I think you can also implement. If you break your year up into calendar quarters, January, February, March, quarter one, April, May, June, quarter two, so on and so forth. How much money have you made with a W-2 if you have one? How much money have you made self-employed? And how much have you invested into business-related expenses? How do you know if when you spend $1, it's a business-related expense? Okay, the IRS really likes 4 words: ordinary, necessary, helpful, or appropriate. So when you spend $1, if it's ordinary, necessary, helpful, or appropriate for you to generate income, track it as a business-related expense. Okay, a lot of you are probably doing this already. Your phone, your internet, your power, portions of the rent or the mortgage if you have the designated home office, your annual fees, your software expenses. All of these, if they're tracked and properly documented, can obviously become business-related expenses. Okay. As you continue to generate additional revenue, I don't know if this one actually, does anyone have an HSA? Tell me in the chat if you have a high deductible insurance plan or if you utilize an HSA. I probably should have taken this one out, talking to a bunch of military. You do have an HSA. Okay, good. I didn't know if we were applicable with VA benefits or how that worked, but if you have a high deductible plan, I want to just give a couple different, let me give you a little background or context to why I'm bringing these next couple slides up. About 9 months ago, we launched a new service called the Decoder, and it's exceeded my expectations. It's really cool. What you do is you upload your previous year's tax return, and AI pulls out all the boxes of your return and identifies whether you're self-employed, whether you're married, what tax codes you're already utilizing. And I wanted to share with you a couple of the ones that we commonly see really benefit self-employed individuals within their tax situation. HSAs were one of those. So if you have a high deductible insurance plan, if you're single, you can put up to $4,400 into your HSA. If you're married, you can put up to $8,750. But what's cool about this is it's one of the only triple tax advantages that I'm aware of. So this year, I'll put $8,700 into my HSA. It's a deductible expense against the business income. I can then invest those dollars so they can grow tax-free. And if I choose or need to take those out for any medical related expenses, co-pays, doctor visits, whatever else, there is no tax penalty. So once again, if you have a high deductible plan, this is potentially something that can benefit you from a tax standpoint, as opposed to just putting that money into a retirement directly. Those of you with kiddos, what can you do to put those kids to work? Help you with cleaning up properties, help you with open house signs, help you with maybe repairs or cleaning the office. I've got 2 little girls. I got a 5-year-old and a 2-year-old. And both of them are models for the business. So my business pays my girls. I get the deduction for them as a business-related expense. They didn't make enough money to file a tax return. So then I can help. That aligns with my goals. I always tell people, you got to find tax strategies that align with your short-term and your long-term goals. Which, by the way, if you don't have kids, throw this one out. If you don't have a high deductible plan, throw this one out. But let's go find these different areas. Okay. What's the lower threshold for the kids? This year, every year it changes a little bit. So under 16,000, there's no requirement on a tax return. It's funny that you ask about the age restriction. It has to be reasonable work. So I can't have my 5-year-old doing my bookkeeping, right? A lot of accountants say that they have to be 8 years old. If that Gerber baby's making money, my babies are making money. So it has to be reasonable work for the age. A lot of times accountants like them to be 8 years old or older, but my 5-year-old, my 2-year-old, they've been on payroll for the modeling services and quarterly photo shoots since they were born. So you got to have a little bit of documentation here. We don't need child labor laws getting called in. I can't put my 5-year-old on a backhoe and put a 12-hour day in, right? So we got to be able to separate it. We got to be able to document it and make sure that it's falling within those guidelines. Okay. Don't be sorry about the questions. I love it. Funny story about this, Ryan. I'm just going to tell you a funny story. So one time I was in Cancun talking to a bunch of doctors, and I was talking about the pay your kids. And someone stood up. They said, Tommy, I'm a former IRS auditor. Your kid has to be 8. I said, well, respectfully, I disagree. It's got to be reasonable work to make sure that it's not conflicting with the child labor laws. And we went back and forth. We had really healthy conversation, but we ended up agreeing on if it's reasonable, if it's documented, then oftentimes there's way, but maybe it's not the full amount. Maybe it's $1,000 for the year, $2,000 for the year. It's got to be reasonable if those kiddos are little. Okay, how do we track paying them? Any requirements to show proof of payment? Michael, really good question. So I have bank accounts for the girls. The business account pays them personally into those accounts. And then I have a tracker. Oh, I wish I brought it. Maybe I can share it with Michael and the team to just share it on a tracker that I have, not only for paying the kids, but also for this next one, the Augusta rule as well. Documentation's very important. I kind of joke that COVID made us all watch so much crime television that we all need an alibi. And tax-wise, it's the same thing. We've got to document. We've got to make sure that in a worst-case scenario, if the IRS doesn't like something that's been taken, we have the proper documentation to be able to show it's legitimate. Okay, I don't want any of these to be utilized as gray area or just trying to pull a quick one. The tax code's 70,000 pages. Let's find the areas of opportunity that align with your life, your short-term and your long-term goals, and use those accordingly. Okay. Has anyone done the Augusta rule? Has anyone implemented this into their taxes? I think the Augusta rule is a really cool one. This was a $46,000 write-off for me last year. Most of our clients, the $10,000 to $20,000 write-off if implemented properly. But it's fitting time for us to talk about this. The Augusta rule, it's actually section 280A of the tax code. So it's a federal tax code, but it started because of the Masters golf tournament, which is this week. So fitting timing. There was a gentleman that lived in Augusta, Georgia back in the 1970s. And when the Masters golf tournament would come into town, he would leave and he would rent his house out. They actually did an article on it in Golf Digest. What this rule says, though, is you can rent your house out up to 14 days a year tax-free. You have to own your house. It's got to be documented. And usually it has to be with other people as well. Okay. But what I'll do is if I'm going over my minutes, my meetings, my bookkeeping, my monthly goals, my quarterly goals, my annual goals, instead of renting out the Marriott conference room to go over these as a business meeting, my business will rent out my house. The business transfers the money to the personal account. It is all documented. And I can do that if it's less than 14 days a year, it becomes a deduction. So once again, if you don't like this, if it's too much documentation, let's go find other areas. But the reason that I wanted to go over a couple of these is just to get your wheels turning on creative options within the tax code that are actual tax laws that can help benefit your situation. Okay. I think about that for agents, for brokers. I didn't know about this stuff growing up, and the amount of times my mom had clients over to the house or whatever else, I know these things weren't utilized and could have made a big difference on that bottom line. Okay. This was the tracking and organizing. When you're tracking those expenses, it results in great savings. It was $9,200 for the average client that tracked expenses in some way, shape, or form. Those that hired a bookkeeper, it was actually closer to $16,000 in savings. But the way that I look at this, I don't think I completed my thought earlier. The reason that I like breaking your profit and loss up into quarters is going into the fourth quarter, October, November, December, I want that to feel like a business shopping spree for your business. Okay, the 77 doors that I own in real estate, I purchased 62 of them in November or December. Why? Because going into the fourth quarter, if you know that profit and loss and you know what revenue's left over, now you have a decision to make. You can invest into software. You can invest into education, training. Maybe it is actually purchasing real estate, running a cost segregation study, accelerating that depreciation, creating cash flow while lowering the tax liability into the next year. Okay, knowledge is power when it comes to just knowing your numbers. And if you're going to end up getting hit with a 10, 20, 50, $100,000 tax bill, there's likely investments that you would prefer to make throughout that fourth quarter that can keep that money in your corner as opposed to handing it over in the form of taxes. Okay. Now, I saw a lot of asset protection and generational wealth comments in here. So I kind of cruised through these last couple topics, but I want to spend a little bit of additional time in these areas here. Asset protection is obviously important. This is kind of a crazy statistic. According to Consumer Shield, 68 million lawsuits a year. It averages about 130 new lawsuits every minute. And here's the way that I like to look at this, because remember, I'm not the attorney. Got a tax attorney right in my office next door here, but breach of contract is number one. And what's interesting about this is whenever a contract is put before you, a lot of times it feels a little bit uncomfortable. So for any of you that have business partners or get into business with someone in the future, here's the way that I like to think about contracts. And by the way, this was a big mistake that I made. I bought my first investment property when I was 22. So 14 years ago now. I bought my first investment property. I knew, liked, and trusted the builder. So a handshake agreement said that we were going to have this price of $420,000. It took 2 years to build, and he wanted $520 by the time it was all said and done. Silly me, trusting, knowing, liking, TBD, to be determined, was on the purchase contract. That was a big learning lesson for me early on. So the way that I think about contracts, Ryan, I'm going to pick on you since you're in the chat, so thank you. If Ryan and I are going into business together, and I'm going to be doing the sales and Ryan's going to be doing the marketing, or Ryan's bringing the money to the deals, what's the percentage of ownership? Maybe Ryan's going to own 60 and I'm going to own 40. What are the roles and the responsibilities? Ryan says, I'm not doing the bookkeeping. I say, okay, you know what? I could do that. I like that. Then once we end up making enough money, maybe we can hire someone to focus on what we want to do. But here's a big area where I see a lot of conflict, especially with family members, by the way. The amount of times I've talked to cousins or family members that, oh, there will never be any issues. We've known each other our whole lives. Next thing you know, there's not enough money or too much money. Ryan, when do you and I want to be able to pay ourselves distributions? Because we could go make $10,000, $20,000, $50,000. And I say, Ryan, I've got bills. I need that money. I need that 40% right now. And then Ryan says, no way. We need to reinvest those dollars back into the business. So once we hit 10,000, 50,000, 100,000, we'll pay out 50% of the profits, 20% of the profits. But the more clear you can get on roles and responsibilities of what you're doing, but what you're not doing, and also that payment schedule on when money's going to be taken out and what money's going to stay within the business to compound and generate additional revenue, I found those to be good areas to just create a healthier working relationship. Okay. A lot of this stuff isn't to point fingers. It's just to create a stronger working relationship moving forward. Okay. So let's change that dynamic a little bit when it comes to contracts. Okay. Now, this is a really cool visual that I like to look at on just what you can consider on how to ultimately separate the personal from the business. Okay. On the personal side, you've got your legal name, your social security number, and your personal FICO credit score that ranges from 300 to 850. Okay, most of you probably already have the LLC in place. You probably already have the EIN number, the employer identification number. You've opened up a separate business bank account. These are all great things. But you can also build and develop a separate credit profile for the business. It's called a paydex score. Okay. Has anyone built or developed this credit profile through Dun & Bradstreet or your paydex profile? The paydex score ranges from 1 to 100, and 80 to 85 on that scale is like you having a 750 to an 800 credit score. Okay. Now, building business credit is not rocket science. It really is a process. So we've broken it down into this 7-step process of number one, let's show yourself as a legitimate business. You have the business name, you have the EIN, maybe you have a professional email or a work phone number. Step number two is making sure that you're verified with Dun & Bradstreet, Experian Business, Equifax Business. Step number three is what we call tier 1 accounts. And I oftentimes joke, by the way, these are accounts that nobody really wants. Gas cards, store credit cards, Uline, Granger. A lot of times people don't really want these different lines of credit, but the reason that they're beneficial from a business standpoint is it's a great way to be able to grow that paydex profile so that you can open the doors for yourself financially into the future. Okay, building business credit does not happen overnight. A lot of times I hate when I see this on social media that it seems like a quick fix or easy to get up to $250,000 of business credit or whatever else. There's a lot of different ways that you can get funding, especially for you in the military and you as veterans. There's a lot of really awesome financing options. But it's not your only option to just go to the bank and ask for a loan. Maybe it's a retirement loan. Maybe it's a real estate loan. We had a client just recently, big real estate investor. They have a show actually on Hulu for real estate and flipping. And they got plenty of money. But because they've built up this credit profile, what they were able to do is they were able to get an SBA loan for a 30,000 square foot trampoline park that's going to create $10,000 to $20,000 of cash flow for them on an annual basis. I share that story with you because I don't know what you'll want or need business credit for a year from now, 3 years from now, 5 years from now. But what I do know is, as I mentioned earlier, I've never met a business owner and entrepreneur that says, I wish I had less money. If you have good personal credit, oftentimes personal problems or issues are easier to resolve. If you have good business credit, oftentimes business problems and issues are easier to resolve. So if you can build these up simultaneous, all of my business lines of credit are much larger than my personal lines of credit. The interest rates are oftentimes much lower. Why? Because banks are businesses and it costs more money to run my business than it does my life. So I go over this just to help you understand it's one more way to separate your personal and your business. It's also a great way to keep you a little bit more organized with your expenses on using business credit, letting the business pay for itself, and then paying yourself from there. Okay. Last slide, and then I'm going to open it up for any Q&A. I want to leave plenty of time to answer any questions that all of you may have. Your structure is a living, breathing organism. And here's what I mean by that. This is by no way what your entity structure needs to look like or will look like. I more so put this together to just once again get you thinking on what do you already have in place versus what you potentially need, want, or create in the future. So up top, we've got an estate plan, trust, will, living will, power of attorney. Now, if you don't have an estate plan in place, it doesn't mean you need one tomorrow. but maybe it's when you get your first property, or you hit your first $1 million, or make your first 100,000, and whatever it may be. You set the goals, you set the targets. Okay. No one cares about your money more than you do. I promise. I always laugh when financial planners, Tommy, let me manage your money. I only make money if you make money. Oh yeah. You're going to lose money if I lose money? I don't think so. Right. So that estate plan is going to help avoid probate. It's going to help protect the assets for the loved ones. From there, remember I talked a little bit earlier about privacy and protection. So not all states are created equal when it comes to corporate law. Okay, Delaware and Wyoming are two that you may have heard of. Delaware and Wyoming provide additional privacy that other states don't offer. So actually, I'm talking to the right group to talk to this about. One time, I was actually talking to another group of real estate veterans. And when I was talking about this privacy aspect, someone said, Tommy, I dare someone to show up at my house. And I kind of chuckled a little bit. We got to laugh as a group, but not me. I want the privacy. I want that protection. So I have a holding company that is based out of Wyoming, and it doesn't even do any business. It owns my other businesses. So real story here. I own 12 different properties in Missouri, and I live in Utah. So my Wyoming company owns my Missouri entity that owns those 12 properties. Okay, 3 weeks ago now, one of the properties caught on fire, an electrical fire. And the tenant was in the process of moving out, but about half of their things burnt, unfortunately. They, of course, did not have renter's insurance. So they're going back and forth wanting me to pay for a lot of these expenses. This is something that I'm currently dealing with. But that Missouri company, they don't see that Tommy Thornburgh is the owner and my address and that I'm the owner of this big company and everything. They see that it's owned by a Wyoming company where my name is not public. So if that's not something you're worried about, throw that out. This is not a requirement, by the way. It's an option that I like to talk to you about for those of you that may be more concerned around the privacy and the protection aspect. From there, once we make that decision, now we've all heard, don't put all your eggs in one basket. Happy Easter, by the way. Don't put all your eggs in one basket, but no one tells you what eggs to put in what baskets. So remember, I talked about a little bit earlier, separating your active income from your passive income. Okay, those of you that are operating as agents or brokers, remember I said earlier that active income over here on the left, you're taxed at the highest rate, 10 to 37%. That's where you're going to write off your phone, your internet, your power, your professional fees, maybe your LLC or your tax accounting services. But if you lower this tax liability, that LLC is the one that may be taxed as an S corporation, depending on how much income you're generating. Now, maybe you go open up a coffee shop or a consulting firm, or you have trading investments. Then maybe you go purchase a rental property and have that passive income. If you can separate your different businesses and your different revenue streams, and you can identify the active income versus the passive income, not only is it giving you separation and protection, but it's also making it easier for you from a tax standpoint to be able to game plan on how you're going to go about this. Okay. The reason that I own as much real estate as I do is because my wife is a real estate professional. She also is an agent. So because my wife is a real estate professional, now when we purchase real estate, we get the opportunity to run a cost segregation study to accelerate that depreciation now. Instead of taking a single family over 27 and a half years, we're taking it over 5, 7, and 15-year increments to lower the tax now, create the cash flow for the future. Okay. As I'm in this wealth building phase of my life, I want to keep more money now to be able to let my money work for itself. Okay. Let my money work for me. Okay. So as I mentioned, some of these tax codes that I covered today may not be applicable to you. This asset protection chart may not be applicable to you, but hopefully this got your wheels turning on what do you have currently? Where are some gaps and holes or areas of opportunity that you can implement in your life and into your business? And if there's one takeaway, how are you tracking your expenses? How can you break the year up into months or quarters so that going into the fourth quarter of the year, you feel a little bit more in control of your finances, as opposed to the feeling that I'm sure some of you have right now of, man, I hope I don't get a big old tax bill, or hopefully I get a tax return. Let's take the reactive filing approach away and implement some proactive strategy throughout the course of the year so that you feel like you're in the driver's seat of the dollars that you've made or the investments that you've made. Okay. I'm going to pause there real quick. Michael, I don't know if you're still here with me. Michael, do you have any questions or anything you want me to elaborate on? If not, I'd love to open it up for some Q&A if anyone has questions.
Yeah, no, this is
Oh,
all
you got
great
spring, you got
information.
spring break. I hear the kids over there. You got spring break.
Yeah, there's a party in the house. I had to mute this out. No, it's awesome information. I've been in those shoes where tax season came up and my accountant told me $25,000. I'm like, oh man, how do we fix that? You start coming up with ways to whittle that down, but learning how to plan and get those numbers down throughout the year, keeping up with expenses is awesome. I think the big question I have that stood out to me, well, two actually, are are there things that I can do to categorize my expenses? Is it that list of 250 that you posted earlier and just plug the receipts and just so when I report the numbers to my accountant, just say, hey, this is my number for this category, this category. Is there like a list that's shareable
Yeah,
that
I'm
can
going to
make
give
that
you a
easier for
couple.
us?
One thing that I want to do here. I'm going to drop a link in the chat for everybody. Um, that link is a tax minimization guide. And what it is when you enter your information, we'll email you a tax minimization guide on different topics to get you thinking about for expenses that you have throughout the course of the year of what is or is not deductible. It's a very digestible, easy tax guide that my marketing company put together. So it looks much prettier than if I was to do it. But yes, that's a great way to go about it. QuickBooks also helps you identify the different categories that you can put those expenses in. There's also a really cool tax app that I like quite a bit called Keeper Tax. I'll throw that in the chat as well. Keeper Tax is an app that's like $170 for the year, which is also tax deductible. But what I like about it is they'll text you at the end of the day, Michael, and say, Michael, I saw you had 15 transactions. Which ones of these are business related? And you just text back 1, 7, 10, and it organizes them in the category in the app. So QuickBooks, Keeper Tax, one designated credit card. These are a couple ways that I have found to be very useful without overcomplicating your life and turning this into your full-time job. I don't want bookkeeping to be your full-time job. I want you to keep revenue in first position and go generate more money. But a good way to keep money in your corner is by tracking it.
The second question I have, I hired a virtual assistant last year and
Okay, awesome.
it's been great. Yeah, it's been great. Very, very happy I made that decision. Wish I did it 3 years ago. The question I have on that is, in America, there's a lot you have to worry about with payroll and how you manage those employees, and it's different for every single state. Is there anything I need to be concerned about having somebody that's outside of the United States, and how do I reflect paying that person on my taxes?
Yep, I have got you right here. So you're going to want to issue them a 1099 NEC or a W-8 BEN. I just put that in the chat for you so you can take it. But throughout the course of the year, when you pay that VA, when you issue them a W-8 BEN or a 1099 NEC, that's the tax form for the proof that you've hired that as contract work to make it deductible on your taxes. I have a bunch of VAs that work within the company as well, and those are the forms that we issue them to make sure we utilize the tax deduction.
Appreciate that. Yeah, I'd like to open the floor up to anybody else.
Great question. Two good ones.
Thanks.
Anyone have
What else we have,
any questions? More than anything, I hope this is valuable information. I tried to keep it to just value and topics, and that deduction guide will hopefully be a good takeaway for all of you to just have a list of other deductions to be aware of. What I'll also do for any of you, I'm going to drop a link, and I've got a code on here that tells me that this is a vet. I just dropped another link. If anyone is interested in a free one-on-one consultation to speak with one of our team members, we are a business. Our services do cost money. I don't ever want to pull a quick one on you. That's not my style. But if you need help from an entity formation standpoint, how to build business credit, tax filing, tax prep, bookkeeping, estate planning, I just put another link in there for you to schedule a free one-on-one consultation. And knowing that you're a veteran, knowing that you're with EXP, those are all going to have discounts on all the services as well, if any of you have interest there. But more than anything, I hope it's valuable. I hope this was good information. And Michael and team, I really appreciate you having me.
Yeah, no, Tommy, this is all great information, especially this time of year. Taxes are probably the biggest thing that come up with, when you're talking to the realtors, like, hey, how do I keep track of things? How do I mitigate the amount I have to pay at the end of the year? And then the entity is the next biggest thing. How do I know if I should do an LLC versus the S corporation? So it's all great information. I'm going to have Faith drop a link for the YouTube channel where everybody can go to see this recording and other recordings that we've done in the EXP Military Network. So check that out. And I want to let everybody know, thank you for coming to this. Really good turnout today. Appreciate the dialogue. The first and third Tuesday of each month, noon Eastern Standard Time, we have these classes. So please join in, spread the word. Anybody else have any questions for Tommy? No. Yeah, nobody else has any information. That was, very informative. Appreciate it, Tommy. Thanks a lot.
Cool. Of course. Thank you so much. We'll talk to you soon.
All right. Yeah, have a good one. Enjoy your break if anybody's on Easter break.